I was watching a TV show one night, and I think it was CNBC or somewhere, and they were featuring interviews with some hedge fund managers and private equity fund managers. And one of those managers made a statement that really resonated with me. He said, a lot of people think that we just invest in securities. We buy stock or maybe real estate or something like that. He said, but we'll actually put money into anything that we think we can get an ROI from. So he said, some of us will invest money in racehorses. Some of us will invest money in classic cars. Some of us will invest in art. All we're looking for is when we put $1 in, we want to get $1 plus something back out. We want that return on our investment. And so later that night, I was actually out walking the dog after I watched this TV show, and I was thinking about the return on investment that we get in the digital space, basically buying leads or generating leads online. We'll buy traffic or advertising online and send people to a page and generate a lead. And a lot of times, the money that we make off of that lead can be a 2-to-1, 3-to-1, 5-to-1 ratio on those dollars. And so I was thinking, wouldn't it be cool if you could take the money that you're able to make, the return that you're able to make on digital advertising or generating leads online, and combine that with the power of an investment fund? Well, you would have something really powerful. Then you would be able to go out and buy every single click or every eyeball related to that particular offer. And that's really where the idea came from. You know, I think anytime you have something new that people really haven't heard that concept before, it kind of throws them a little bit. And one of the biggest challenges for us was explaining to people how we've taken lead generation and converted it into an asset class. I look back at one of the very first conversations I had with a hedge fund administration company. The guy was listening to me, and he said, now run that by me again. And so I described to him the strategy, and he literally said, one more time, go. I think I got it, but one more time. He had me go through it 3 times with him. And so I went back through the strategy, and he sat back, he's like, holy crap, you've created a whole new asset class. You've turned leads into an asset. And so we've all looked at that in business as lead generation, for a company. When you have a list of people, that is an asset, but no one really ever thought about tying it to an investment fund. And one of the biggest challenges has been explaining this idea to people that maybe understand investing but don't understand digital marketing, or even maybe understand digital marketing but aren't big investors. So being able to articulate that in a way that people understood it. And one of the simplest things that we've been able to do is say, look, when you go on the internet and you see those Facebook ads on the side of your Facebook account, or you go to Google and search and you see ads at the top and ads down the side, we're some of the people that buy those ads. And we direct that traffic over to a page where people put in an email address, or they might fill out a form and put their phone number, or they might fill out a form and put a bunch of detailed information. Every time that happens, we get paid for it. And so what we do is, just like in investing with stock market or anything else, you want to buy low, sell high, right? Well, we want to buy traffic that costs this much and sell the lead for this much, and the difference is profit. And once people understand that we're really dealing in leads, we're really dealing in client acquisition for companies, then they understand the concept a little bit better, but they also understand that this is something that's going to last, because companies have an insatiable demand for leads. In fact, you'll find research online that says anywhere from about 60% to 78% of companies surveyed say that lead generation is their number one challenge in business right now, generating new customers online. And so we're the people that actually bring that. We have built a team of the absolute best geniuses in creating marketing funnels, creating pages that convert people to leads, and then the people that buy the traffic and send those leads, those people, over to those pages to put their information into a form on the internet. That's what we do, and that's all we do, and we do it exceptionally well. Since 2004, I've been online. I'm going on now 26 years of building companies, but since 2004, I've been on the internet in the digital marketing space. I already knew that we could make money generating leads. In other words, I already knew that you could spend money on traffic to generate a lead that would be less than what that value of that lead is worth. So I knew that worked. What I didn't know is what kind of scale that we could get with this. And so when I started the fund, I literally did a little webinar, a little webcast with some of my existing clients and colleagues. I had like 32 people on this webcast. And I said, here's my idea. Here's what I think I can do with it. Don't give me a bunch of money. I don't want it. I wanted like $5,000, $10,000, $15,000 from a few people so that I could go out and get proof of concept. Because I knew that in order to grow something like that and ultimately get other people who didn't know me, didn't already trust me, didn't already have a relationship with me, to hand over their hard-earned savings to invest those dollars, that I'd have to have significant proof of concept. So it was interesting. The first investor that came on board, he had a conversation with me on the phone about 2 days after that webcast, and he wired me $5,000. He said, I've got about $10,000, $15,000 more I'm going to send you in a week or so, but he sent me $5,000 just like that immediately. He said, see what you can do with that, get started with it. And then we had 2 or 3 other people that invested some money with us there early on. And what was interesting was I went out and started doing exactly what I had said I was going to do. I had some of my money in the pool as well. So I went out there and took those dollars and started buying traffic and sending people to lead generation pages and generating leads, getting paid for the leads. In the first 7 weeks, the fund was up 68%. In other words, we had generated a 68% return on investment in 7 weeks. Well, nobody does that in the investment world. Every once in a while you have a fluke, right? And something goes crazy, you timed it, and it just worked out just right for you. But very few people can do that. But I also didn't know, could we sustain it? I didn't know long term, what were the big problems that we would run up against? What were the downsides? What were the biggest challenges that we would face? And so I really wanted to run this thing through its paces. And so for the first 6 months, we literally bought traffic, sent people to pages, generated leads. And it was interesting because during that first 6 months, we actually found some of our biggest problems or roadblocks that surfaced. So, you know, when you start a new business, you start a new concept or an idea, you try to predict all of the challenges and frustrations and pitfalls and things that are going to happen, but you don't know what they all are. You have things that come along that surprise you. And we did. We had things that came up. And as they came up, we stopped and we said, okay, how do we address that problem? How do we address that challenge? Is it a fixable thing? Warren Buffett has a great phrase. He says, Warren Buffett's rules. Rule number 1 is don't lose money. Rule number 2 is see rule number 1. And so whenever I got into this, number 1, I had my own money in this. I didn't want to lose any money. And number 2, I had other people's money. So a lot riding on that. My reputation. I've been literally in the digital space since 2004. I'm very well known among that crowd of people. And then literally, if you go and look on the internet, you'll see my name. I've written articles. I've spoken at conferences. I've gotten out there. I didn't want to take that reputation and wipe it out with something that didn't work. And so we put it through 6 months, literally, of hardcore pacing. As we found the problems, we addressed them, we fixed them, we overcame them, and then we started scaling and building something. So really we have 2 different clients. Ultimately, our end user of the leads that we generate are the businesses. But the client that we spend a lot of time focusing on is our investors, the people that put their money up and expect a return on that money. So we have investors on one hand, and we have business owners or entrepreneurs or CEOs of companies that they're running those companies and they're trying to grow them. And those are our 2 customers or clients that we serve. You look at the market right now, and even, depending on when you're watching this video, within the last few weeks to the last few months, we've seen the market go, just big dive. And people freak out, oh, China's, doing this and we're going to all, be back in depression era kind of thing. And people are scared. They're really frustrated. We did a survey, Harbor City Capital did a survey, and we asked people, what are your biggest challenges and frustrations as an individual investor? And consistently, people said the turbulent market. We don't know when the next downturn is going to happen. Well, if you look historically, the market corrects every 6 to 7 years. It happens, and it happens again, and it happens again, and it happens again. And people say, oh, well, I'm in the market for the long term, so I'll ride it out for the long term. Well, the problem with that scenario is when you get past that next big drop in the market, where do you get your next 6 or 7 years back? Like the 6 or 7 years you spent building that nest egg, how do you get that money back? And so people that are loaded up in stocks or in mutual funds or 401k funds that are heavy in stocks. The challenge with that is that you're literally putting your trust in something that is controlled by people's opinions. See an article come out. A great example right now, Oprah Winfrey took a 10% stake in Weight Watchers. What happened to the stock? Psh, shot through the roof. Now, Oprah made a lot of money, and the people that were in the stock at the time made a lot of money. But was the stock that much more valuable just because Oprah bought into it? So you have to look at it and you say, well, people's opinions and their emotions are getting involved in the value of that stock. And so we know, you ask all of the big financial gurus out there, all of the advisors out there, they'll tell you the shoe is about to drop. It's going to happen. It's going to happen. We're going to go into another bear market. It's going to happen. So how do you survive that? Well, look to alternatives. And when you think about alternative investments, a lot of people think gold or silver or real estate or whatever. The challenge is that a lot of people go into things thinking that they're going to make a decent return or good money, but they have absolutely no understanding of how those things work, how those investments work. So I always tell people, number one, right now you need to be looking at alternatives outside of the market, looking at investments that are not tied to the stock market. And that's number one. But the next thing you need to do is make sure that you're going into something that you understand. And if you don't understand it, educate yourself and ask questions and make sure whoever you're putting your money with is willing to completely explain to you how that investment works. And most folks aren't. They do what they call hope investing. They put the money in and they hope it works out. So I coined the phrase digital marketing arbitrage. Sounds super sexy. Really, at the end of the day, arbitrage is taking an advantage of inefficiencies in a marketplace and capitalizing or profiting from those differences and those inefficiencies. So really, at the end of the day, digital marketing arbitrage is we're really, really good at buying traffic and generating leads, and we do that at a cost that is significantly less than what companies are willing to pay us for the privilege of having those leads. One of the most powerful things about digital marketing arbitrage is it's an investment vehicle that has absolutely nothing to do with the market. So things can go up, things can go down. Guess what? Companies still need new customers. They still need leads. In times that are good, when money's running in the streets, lots of people are out there buying leads. When times get tough and people pull back, they're going to cut back on company vacations and retreats and all that kind of stuff. But the one thing that they continue to invest in is customer acquisition. So whether times are good or times are bad, digital marketing arbitrage capitalizes on those times. And the worst things are, guess what? The more people are willing to pay to get the lead. So the more important it is, you look at supply and demand. If there's this huge pool of insurance leads out there and times get tough and fewer people are buying insurance, well, guess what? Those leads are actually more expensive than they were when times are good. So by accident, we literally fell into a situation where we win and our investors win, whether the market's up or the market's down, whether the economy's bustling and doing great or the economy is having a struggle, we're still going to win and our investors are going to win. We did a survey of individual investors and many of them talked about the volatile market. Many of them talked about how do you find a good investment that's safe and will generate a good return, but also is not high risk. But one of the answers that we got back as one of their biggest fears and frustrations is literally having someone scam them or take advantage of them. And folks are worried that their broker is taking advantage of them. They're worried that the people running a mutual fund are taking advantage of them. They're worried that the government's taking advantage of them. But the one thing they don't want to do is put their money with a company only to see it go away. I had a phone call literally yesterday from one of our investors, and they had actually planned on putting more money with us at this particular period of time. And they called us and said, we can't put the additional funds in because that oil well thing that we invested in didn't pan out and our money's gone. So, boom, it just blew up. And we're talking about a $100,000 investment for these folks that the money just evaporated into this investment opportunity. Harbor City conducted a survey with individual investors, and as we asked them the question about what were their biggest fears or challenges or frustrations in the marketplace, we saw things like a volatile market. We saw things like feeling challenged with not being able to find a safe investment that generates good returns. But one of the things that we heard over and over and over again from people in that survey was, I don't know who I can trust. Because people have been ripped off, lied to, charged hidden fees, all sorts of things done to them by their brokers, by the people running the mutual funds, by the people that are supposed to be managing their 401k, and on and on and on. And people are literally gun shy and fearful of who they can go to and who they can trust. One of the things that when we began to build Harbor City Capital, I wanted to build the company on three really important factors. Number one, I wanted to bring together the absolute best people that were available for our particular area of expertise. We have hired really beyond almost any demand and need that we had initially, thinking ahead and providing depth of leadership, depth in skills.